Hey, welcome back to another podcast. My name is Slavik, and I'm the owner of Adrian Homes in Spartanburg, South Carolina. And today I want to talk to you about something that is very important, and it's taxes. We all love taxes, and taxes are amazing, especially paying them, right? You can hear the sarcasm in my voice. Whenever you get that bill in March or April, everyone always is like, oh, not this again. But today I want to show you a tip and a cool trick on how to eliminate taxes or lower your tax bracket in some areas, which will help you save on taxes. So one of the biggest things that I want to talk to you about today is eliminating or lowering your tax bracket by paying your children. I know on social media and on Instagram and on Facebook and on YouTube, there's tons and tons and tons of reels telling you, pay your children and you'll be free of taxes. Well, there is a legal way to do it, and you have to document it. The child actually has to work for you. There's also child labor laws that you have to look into in your state, wherever you are working and whatever you're doing. You always have to look at all of these things. Now, owning a business, your child can be a model for the business. Now, you will have to pay the child according to standard rates or whatever the fees would be. You have to watch out for all those rules so that you're not paying your child $60,000 for taking 2 pictures a year. I have 3 children, and what I can do, my 5-year-old, I can't really do much with her other than modeling, and she won't be able to make the top dollar on it. But I have 2 older children, 10 and 8, and they are able to come in to the office. They're able to scan documents. They're able to enter that stuff into the computer because they are smart kids. They're able to go in and actually make things happen for me, make things work, not just come in and hang out or look at things. They're able to clean the office. They are able to go out and take out trash. And there's so much that children are able to do. And then if you hire them and you pay them a W-2, and it has to be documented. It can't be just like, oh, well, I'm paying my kids $10,000 a year. These things have to be documented because the IRS they will look into it if you don't have things documented. Very, very important is to make sure that everything that they are doing is for business, and then you make sure that you are documenting everything. Documentation is key. Actually, in taxes altogether, documentation is key. It will help you if you ever get audited. It will help you to be able to show exactly what was for what and what's going on with different things. First and foremost, children, you are able to use them as a tax deduction, but not really a deduction. It lowers your tax bracket in a way where, let's say you are making $405,000 a year, and at $400,000 and $1,000 or more, $400,001, you are taxed at 35%. So if you have 3 children and then you have a wife, you are able. There's for the children. There's a way that you can pay them up to $12,000 at 0% tax on the federal level. Now, state level, it depends on state. Different states tax differently on that. But on the federal level, up to $12,500, I think this year, you are able to deduct or pay your child that $12,500, and for that $12,500, you won't be paying taxes. So let's look at it this way. If I'm going to be in the 35% tax bracket, and I'm going to be paying $12,500 to 2 kids, that puts it at $25,000, and at 35%, I'm going to pay $8,750 in taxes. So you are saving by paying your children $25,000 legally, everything being backed up properly. You are saving $8,750. $8,750 is huge. But another thing that you are doing is you are now dropping back down to a lower tax bracket because you're not past that $400,000. Or let's say you're in the 160. So if you're at 165,000, there's a 165,000 to $315,000 bracket that's at $24,000, 24%, and then the next bracket is $315,001 plus, puts you at 32%. That's a hefty 8% increase, and 8% is a lot of money on that. But if you are able to reduce that by paying your children, now you don't fall into that 32% bracket. Another thing that I do want to explain in taxes, a lot of people think that, okay, I make $315,000. So if at $315,000, I have to pay 0.32% interest, 0.32% in taxes, or 32% of taxes. So that puts me at $100,000 that I'm going to have to pay in taxes. Read the tax code properly. That is incorrect, because if you are making up to $9,500, you are going to get, and this is, I'm looking at tax bracket from 2018 right now. So don't quote me on these exact numbers. I'm looking at an old tax code. I'm not looking at 2023, which we're in right now. So go back and look at them. But if you are make up to $9,500 and you are single, you will pay 10% taxes. Now, anything that you make over $9,525 up to $38,700, that difference get taxed at 12%. Don't think that your whole entire income of $300,000 gets taxed at the full 32%. It's only the amount of money that is within that bracket that gets taxed at that rate. So I hear people saying all the time, oh, I'm taxed at 37%. Baloney. You're not taxed at 37%. That is incorrect. You obviously don't know how the tax code works. You get taxed only that difference. So at 24%, tax is $165,000 plus up to $315,000. So if you make anywhere between that, only what is made in between will get taxed at that 24% rate. So don't get confused with the way the tax law works. But so you're saving by paying your two children $25,000. You're saving $8,700 that you don't have to pay in taxes. So, but your children are paying zero on the federal level. So that is very important. So whenever you are filing your taxes, whenever you're doing that, get your children involved in the business, whatever that may be. And that is a huge incentive that the government gives in order for you to save and not have to spend as much money. Also, whenever you are filing jointly, there is a greater grace, I would say, that is given. So let's say at a married filing joint and surviving spouse, you get taxed at 10% up to $19,000. So that's an extra 10 grand. If you're single, then you're at $9,500. But if you are married, you're at $19,000. So there's that $10,000 that extra that you will get taxed at a lower tax rate. Your whole goal is to lower the amount of money you pay in taxes. So lowering your income is something that nobody wants to do. But if you are able to depreciate, there's write-offs that you are able to do that are legal write-offs. Your vehicle, if you use it for work, you are able to write off the mileage on it. If you have food with someone, again, documentation is key in everything. If you don't want the IRS to be on your case, document it. That is important. Okay? Whenever they call you and say, hey, we're going to audit you, or send you a letter and say, hey, we're going to audit you, you send that documentation, you're not even going to have to sweat a bullet. But if you're not documented, you are going to be worried. IRS is, everyone's afraid of the IRS whenever you're not doing things right. When you do things right and according to the book, you have no issue with the IRS. We have no issues with them. We believe that the IRS is, I don't like paying it, but I think that they give us tons of incentives. And I think the IRS actually helps you as a consumer, as a person, make better life choices, make better life decisions, make investments into your future. Now, of course, I do understand whenever you do sell a property, you are going to have to pay that capital gains and all of that back. But if you reinvest, you are able to reinvest, and it works, and you save on that. But overall, the way I look at the IRS structure is that it helps everyone to become smarter and wiser in your business dealings and everything that you do. It encourages you to invest and to make more money, generate more money. Another thing that I want to mention is it helps a lot whenever you do, donations. Donations are to a 501c3 are fully deductible. But again, if you're just trying to lower your tax bracket, look in what you're donating. I'm not talking anyone out of donations. If you want to give more, you're more than welcome to give. But again, if you are donating $100,000, you're only saving, let's say, and you're in the 32% bracket, $100,000, you're only saving $32,000. So yes, you gave 100, but on tax-wise, you save 32,000. When you invest, you are able to actually retain a lot more than just the $32,000. Just because of depreciation. Yes, you spend the money, but then you got depreciation. You got all these things that come into effect, and it helps you out a lot. Children are tax bracket assets. I want to emphasize that. Children are tax bracket assets. You want to have children, and you want to utilize this tax bracket. Now, if you do not have children, there's probably other things that work for you. I haven't looked into that because I have children and I'm able to do it. And the Bible says, be fruitful and multiply and fill the land. So there you go. I'm just trying to obey the word of God and fill the land with people that love the Lord. But business, in business, we're all about investing. I know we're all about making money. We're all about producing, generating wealth and all of that. And it's very important to leverage all of that the government has to offer. The IRS is not bad. The tax laws are not bad. And everything that if you look at every single law that the Congress or Senate are standing behind, you need to look into those laws that they don't want to get rid of. Look into those laws that are not going away and jump on board on those. Jump on board because those laws benefit you. If they benefit them and they want those laws in place, then you need to go in and you need to go after those laws. It's clear. It's clear. Whenever you look at what they're doing, what the government is doing, just follow them. Just follow the guys upstairs. Whatever laws they want to keep in place, follow those same rules, same laws. And children have an asset that is very, very underutilized. I do believe that this is underutilized because a lot of people say, well, I'm going to have to put my children on payroll. There's a lot of paperwork and everything. I mean, for 2 kids, $8,000, I believe that's a lot of money. Another thing that you can do is you can pay your child, and let me get my thought together on this properly. You can pay your child, and you know that baseball that you have to pay for your kid? Well, and it's expensive. You don't have to pay that anymore. And it's not, if you pay it out of your business or out of your personal, it's not tax deductible. But once you pay your child a salary of $12,000, now that $12,000 got deducted, and that baseball game that they're playing and whatever equipment that they have to purchase is deducted now, because you didn't pay taxes on that income. Yes, children will still have to pay the income tax on a state level, but I'm saying you just cut out that huge percentage that you would already spend on, whether that be baseball, whether that be hockey, volleyball, gymnastics, whatever it is, whatever sport your child is involved in. You don't have to pay that straight out of your company anymore. Now you have your child paying for their own. And then another thing that you can utilize this as is family vacations. If you're not, if you're not worried about building your child's wealth, but you're just using this as a tax incentive, vacations, family vacations are not deductible. Well, if you have 2 children and you're paying them $25,000 a year, out of $25,000, I think you can spend, you will be able to spend all of that on whatever you need. But that $5,000 vacation that you've always wanted to go on, now you have your kid pay for it, and technically it's deducted out of your taxes. So leverage these rules to your fullest extent. You are able to do this. And again, everything that I do say, I'm going to give a full disclosure on this. Everything I do say is things that I've learned from the tax code. You need to go and study it yourself. And also ask your CPA, ask your attorney, how can I make this work? Is this legal in my state where I live? Can I do this? And 90% of the time they will answer yes. And if they answer no, ask them why. And, refer to things that I spoke about. And you will be able to eliminate that. You'll be able to eliminate that, save money on taxes, and generate wealth. Because the more money you have in your pocket, the more you grow your local economy. It's not about just paying our taxes and let the government pave the roads and everything like that. The more money we as consumers retain in our pockets, the more we spend in our local community, the more our local economy grows and thrives. That is why, for me, I believe saving and learning all these tax strategies and learning all of these things about taxes is so important, and it will help us build better communities, build stronger communities, build wealth, generational wealth, as well as sustainable wealth. Teach your children in money, and there you go. You will be able to grow with that. Another thing about children is that they do not have to pay Social Security tax on their income. So that's another, I don't remember, I think it's 10 or 12% that you save on taxes by hiring your children, and they don't have to pay Social Security taxes on it. So there's a lot of savings when it comes to hiring your children to work for you. One very important thing, whenever we talk about hiring your children, I want to emphasize this. The child's job has to be age appropriate because of child labor laws, as well as it has to be well documented. And then your payroll has to be documented as well. So those are 3 very important things when it comes to hiring your children to work for you, is make sure you document it, make sure it's age appropriate, and just go all out. You're able to do it, and you're able to build generational wealth. That's all that I have for this episode. I'd like for you to follow us on Instagram, follow us on Facebook, subscribe to our YouTube channel, like this video, comment. If you have questions about anything that I spoke, comment, leave me a comment. If you have negative comments, leave them there as well. If anything you have to say, send it to me. I'll be more than happy to answer it. And whatever we can do to build a better, stronger community, that's what I'm here for. God bless you. Take care. We'll see you next time.